Hi everyone and welcome to today's morning report on Friday the 15th of July with me, Richard Perry, market analyst at Handtech Markets. We've got a fairly mixed sentiment on markets today. We had overnight pretty positive data out of China, which helped to improve sentiment. We had the industrial production beating expectations, we had the retail sales beating expectations, and we had the GDP coming in ahead of expectations as well at 6.7%. However, we've had this terrorist attack in Nice, which has sort of taken a lot of the shine off that positive sort of reaction from the data, and markets are looking pretty more sort of mixed of outlook really on the back of that. Equity markets fairly flat. I mean, the CAC is slightly underperforming, but nothing too drastically. But yeah, just a generally a fairly muted sentiment on equity markets. A little bit more risk positive on forex. You've got sterling, which continues to rally actually. In the wake of that decision by the Bank of England to hold interest rates and not make the cut. The dollar's slightly weaker. You've got Treasury yields, which has not really moved a great deal today, but generally speaking, the dollar is slightly weaker. Interesting that we've had this sort of slight attempted rebound on oil price yesterday. Again, look at that 45.83 neckline. We sort of break down. Break higher and then subsequently correction back through it again on Wednesday. Yesterday's high pretty much bang on that, and again today can't get back through it. So the outlook for the oil still remains a little bit under pressure, medium term. Having broken through this key support at 45.83, sort of next real support comes in at 43.20 area, which looks to be sort of where we're coming back to potentially. But generally speaking, we're sort of fairly muted today in terms of our trading, apart from sterling, which is fairly positive, and also the move on the yen, which continues to unwind. And I'll talk about these things when I look through my forex charts. But we actually have quite a bit of data out today. We've got the. Let me just show you. Sorry, let me just get them up. First of all, Eurozone inflation, and that comes out at 10 o'clock, which is the final reading for the June inflation data. It comes in, likely to come in at plus 0.1%, so very minor inflation there in the Eurozone still. But, oh sorry, that's the wrong one. Where are my charts? There we go. Yeah, I've had a bit of trouble in my Reuters charts today, so I'm going to have to do them a different way slightly. But we've got inflation for CPI at 130 for the US. That's expected to come in at plus 1.1% again for the headline data, and also it's expected to coming slightly higher again. Sorry, I'm not really getting a reading on the core data, but it's expected to come in slightly higher on the core data at plus 2.3. The retail sales is at 130 as well, expected to come in at plus 0.4% for the adjusted retail sales month on month, which would basically be just in line with last month at 2.5% for the year on year. Industrial production again expected to come in at plus 0.2% on the Reuters expectations there, and again that would be pretty much holding where we had last month. So that would be at that's at 215. And the industrial capacity utilisation as well, expected to be at 75, up slightly from 74.9. Finally, Michigan sentiment at 3 o'clock, expected to come in at 93.5. So lots going on actually today, but as I said, the markets are sort of fairly muted in terms of risk appetite, and FTSE 100 is my chart of the day, and is interesting, FTSE 100, because we've got I don't know whether this is a pre-described trading pattern or not, but it's sort of like an expanding series of candles on this, and it's culminated in a sort of bearish engulfing, which closed just below the low yesterday of the previous day's low, and also arguably a shooting star as well. So that pretty much puts more of a negative spin on FTSE. And you think about the fact that sterling has been rallying. FTSE has previously, when sterling was weak, FTSE was strong because of the strong foreign earnings element of FTSE, and also the dividends paid in dollars. Since sterling has rallied, FTSE's really started to struggle, and that is reflecting in these technicals. Although this is the first real sign yesterday, that shooting star yesterday is the first real sign of a negative correction pattern. You're still seeing these momentum indicators, which are fairly positive, but you've seen the stochastics crossing over. Not a confirmed sell signal by any means yet, but certainly this candle that we had yesterday is the first sign of a possible correction. You can see the hourly chart when it comes up, sort of rolling over, really minor top pattern, you can argue, but it's sort of coming back towards the breakout support, 66.12, I think it was. Is that high? Yeah, 66.12. It's the sort of breakout support, and it's tested that already today, just marginally above it, and held on to that. But look at the hourly RSI in this chart. I'd say that would be one to watch, because since the rally really started to kick in, that 35-36 level on the RSI you've not seen a move below it. So if you saw a move below that, that would be a disappointment. Look at the MACD lines as well. Bearish divergence arguably there. Stochastics on the hourly as well at bearish divergence. So you are starting to see a few corrective signals starting to come through on these indicators, and it'll be interesting to see if this starts to sort of roll over a bit. It's sort of rebounded back slightly today, but already it's sort of tested lower again today. So there is a lack of sort of buying that's going on in the FTSE now after this strong run higher, and it'll be interesting to see if there's some profit taking that starts to come through. As I said, 66.12 is the first support, then 65.80. And beyond 65.80, which is 64.32, and again 64.32 was basically bang on the breakout level, 64.27. So that would probably be where we'd come back to, I think, in the event of a corrective move. So I wish you good luck in your trading on FTSE today. Yesterday's rally high, 67.43 is the resistance. 67, I think it was 02. It's a minor, if I zoom in, you can see a minor reaction high following on from the immediate, no, 6704, sorry, is the rally high intraday yesterday. Adds to the resistance. So good luck in your trading today on FTSE, and I'll speak to you later. Thank you.